Hey guys, today I found a new post on Reddit from a user named Jojo1206515. Basically says that spouse passed away and we just received the insurance payout. My son and I received 100,000 from my late husband's life insurance. I currently owe about 18,000 for my car. Have about $6,000 to $8,000 in credit card debt. My son will be receiving about 2,000 a month in survivor's benefit. We are currently moving to my parents' home to cut costs, and will probably pay about 2,000 a month to help out with mortgage, bills, food, etc. Most likely less than that, but I am over budgeting just in case. I currently make a little over 2 grand a month. I have 20,000 in savings account just to give that gives 4% interest. Honestly, this is the first time ever in my life I had so much money, but I'm not sure what to do. Any advice? I'm trying my best to secure my son and my future. First and foremost, my condolences to you on your late husband. Um, I don't really know what to say. Uh, as far as the money and finance is concerned, obviously a lot of people already told you this, but I would definitely pay off all of your debt, which is your car. Pay that off completely. Pay off $8,000 in credit card off completely as well. So that will take $26,000 out of that. And then currently you're looking at about 2 grand a month or less in expenses, which by the way, you're doing the best thing you could do, which is moving back in with your parents to reduce expenses, which is perfect. So you're looking at about 2 grand a month. I would say put another 4,000 into $20,000 to use it as a emergency fund. So that sets you up for at least about a year or so that you can kind of survive off of that. And then the rest of it, I guess about $70,000 or so. I guess you can try to put it into low cost index, where you can kind of put it away, set it away, and then they will kind of compound it for you year over year. On average, about 10% a year. Recently we just had a really bad turn that it looks like it's going back up. So I would think it's gonna actually go up. Statistically speaking, it should be going up, right? So who knows? But in the long term play, that should be actually a good way to set aside this big windfall that you had. Now, as far as your son's $2,000 is concerned, I'm not sure that's actually after the withholdings. I'm guessing that's from the Social Security benefit. I'm not sure, again, it's from the after the withholdings. But if it's not counting that, I'll probably set aside maybe like 10% of that, just in case for the taxes, 10, 15, maybe 20, even 20% of that into like another high yield savings account, kind of like where you have it at, as a just in case for the taxes, because at the end of the year, you have to pay taxes on that as an income. I think right now, I think it comes out to be about 1,800 a month is the income threshold. Is about 12,950. So it looks like about $1,000 per month or more. So definitely he would have to pay taxes on that. I would think. Again, I'm not a CPA, so consult with them about that. But the rest of the money, since it looks like he doesn't probably need any of that, I will probably help him open up a either 529 account or a UGMA or / UTMA account. Obviously, since he's receiving your husband's death survivor benefits, I'm guessing he's a minor and he's under 18. I'm not sure how old he is exactly, but I'll probably open something like that up where you can kind of set it aside for that to kind of grow as well, unless he's like 15 years old and he's about to go to college in like next 2-3 years, and obviously that doesn't make any sense because you could actually lose that money there. But I'll try to do that, set it aside as much as you can. Now, if he does have some sort of an income because he's maybe 16 years old or older, then obviously maybe you can open up like a Roth IRA for him, where he can use that to kind of help it grow, since he won't need it. But and regardless, you can open up again like UGMA or UTMA account as an investment account, and you can again do the same thing for him, which we kind of recommended that you do for yourself for that $70,000. But another thing after that, I think, is that your income situation. Like, the best thing you can do for you and your son, of course, is using that money a little bit more wisely and stuff like that to kind of set yourself up for the future, which is great. But really, you having $2,000 in income, I think, is going to be a thing. Now, of course, what happened with your husband and all of that is actually a bad thing. But now that you have moved in with your parents, essentially, yes, you're helping out with the expenses and stuff like that, but ultimately you almost kind of like became almost like a liability free or debt free, almost expense free to a degree. Like your obligation or the liability has gone down almost to zero, right? And again, now that you have $24,000 or so set aside for an emergency fund, I think again you can use that to kind of survive off for almost a year or more, based on what you're telling me, just on that money. And that's really important because that actually just bought yourself about a year for you to not have to work at this job where you're making $2,000 per month. And that's really important because I think you can use some of that time, maybe not the whole 12 months, but you can probably use some of that time to kind of pivot yourself from this point to getting another job where you can actually make a lot more money. Now, again, there is a risk of always trying to find another job and things like that. But if you're currently in today's day and age making $2,000 a month, I'm guessing, I think the, $15 an hour, I think pays you, I think like $2,600 per month. So if you're getting, $2,000 per month, that tells me, obviously you're making less than that for one, but also I think, your job has to be, pretty low paying, like simple task type of thing. And not to say anything bad about one or the other, it's just that those are the things, type of jobs that you can probably get at any time, at anywhere, wherever. Versus if you actually put your mind to it, maybe you can look into it to getting maybe more skills, or again, like look for something where you could use your time a little more wisely. I'm not sure what type of education or skills or what have you, or the experience that you have, but I would definitely look to finding another job where you can actually earn more than just $2,000 per month. Because ultimately, at the end of the day, yes, having 100,000 plus is good, doing this and getting additional $2,000 per month for your son, for the survivorship and all that is great, but that will not be enough, and it won't be, definitely not enough for the future. And I think that's what you're looking for, is that, how can you pivot at this point to kind of use this to kind of secure it, and, and I think that's really the best way to kind of maximize this opportunity you got, really, because again, this $2,000 a month that's coming in that could potentially replace your income as well, right? Like the amount of money that your son is getting. Yes, 100,000 is a lot of money. It's a great thing to get, but again, it's at some point, like, I would say get rid of that. Pretend like you don't even have it. Don't even think about it. Don't touch it. But absolutely get rid of the debt that you got and store it away as much as you can. But, use this opportunity to actually maybe, get more skills, I would say, maybe get into the sales, just because, again, that has a higher potential for the income. Or maybe nowadays, there are a lot of, opportunity in the computer science industry. So maybe get into that, something like that. But something, more than just, again, $2,000 a month, because again, in the long term, I don't think it's going to be any, future in making $2,000 per month. Hope that helps. I would love to hear your comments, suggestions, anything like that at all. Please comment and subscribe. Thank you.